Hello, friends. Today we're taking a look at the Coca-Cola Company, ticker symbol KO. We'll be looking at the last 5 year performance of the stock. Then we'll jump into earnings, which actually is coming up in about 15 days. Then we'll look at the last 10 years fundamentals and try to find a fair value for this company. Welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. The Coca-Cola Company in the last 5 days is down almost 2%. In the last month, 4.2%. In the last year, it is down about 7.1%. I used to own Coca-Cola. I bought it after this big dip whenever it went down over here, and I sold it somewhere around here whenever it got a little flat. In the last 5 years, is being up 24%, which is it's okay. Like I mentioned before, they're going to be reporting earnings on April 30th, which will be about 15 days from today. They do have a dividend, which is $1.94. Right now, it will be a yield of 3.33%. Analysts are thinking that this stock could go up in the next year at all the way up to $67, which will be about a gain of 15%. So right now is trading at about 23 times their earnings but if we look forward at the projected earnings, they are up. They're trading about 20 times earnings. So I know that there's a lot of things going on in the economy right now, and it will be this is the reason why I'm taking a look again, whether it is a good time to enter and hold, or if there's more pain ahead. In the last earnings, they missed on EPS, and the revenue was they beat by $297 million, which is not that much whenever you look at a revenue of almost $11 billion. The analysts are expecting the upcoming earnings report to be at 70 cents in EPS, which is it's really high from the last earnings report, and they're expecting for them to go a little bit higher on revenue. In the last 90 days, we have 11 revisions down and one up. So that is a little bit concerning to me. It there's an argument that it will be better to wait until they announce earnings and see what the earnings are they're trending to. Whenever we look at some of the estimates in the next this is the yearly. No, this is where is the yearly? I don't have the yearly right here. Yearly comes over here. We go down here. This is Seeking Alpha. I like to use Seeking Alpha. If you look at the estimates, it's estimated to grow a little bit on this year, and then about 3 billions on 2025. And then when it comes to the earnings, just a steady grow. So those are some other things that we should be considering whenever we're looking at Coca-Cola. And as I'm looking at it, I would love to know, what do you think about it? Do you think that are you holding this company? Are you thinking about buying it? If you like what I am posting, just subscribe. I'm trying to get to the 500 subscribers, and I really appreciate all the support that I've been getting. Please let me know if I am missed something, if there is anything that you will any company that you would like me to review. Just let me know down in the description. Let's jump right into the last 10 years of Coca-Cola. As you can see, Coca-Cola revenue has remained a little steady. It went down from 2014 to 2018, stayed kind of flat 2018 to 2020, and then it jumped. It has been growing in the last couple of years. If we look at the last 5 years, it's grown. Um, the revenue has grown 4%, but in the last 10 years have remained a little flat. Gross margins are really nice, almost 60%. That is a really good number. And this is part of the reason why a lot of people like Coca-Cola, because at 60% gross margin, they have a power, pricing power. So even if products went to go up, they will still be making money. When it comes to making money earnings, as you can see, even though the revenue has been going down and up, revenue has stayed, um, um, except for 2017, kind of flat until 2018 and started growing little by little. So in the last 5 years, grown 3.6% CAGR, and in the last 10 years at 44, 44, 4%, 4.44% in the last 10 years, which is it's really not great. I like to look for companies that are growing revenue and earnings and free cash flow. I like them to be mega compounders, something really good, at least 10%. So this is not great. Profit margins are nice at 23%. I like it to be 20 to 25%. So that's pretty nice. Free cash flow. We can see the free cash flow that is pretty steady, pretty flat. Um, so in the last 5 years, is flat at 0.63%. In the last 10 years, growing at 1.7%. Free cash flow margins, again, 25%. That's pretty good. And in the last 5 years, their free cash flow yield is at really nice 3.9%. That is really nice. And that's the thing about Coca-Cola. Coca-Cola do have a lot of free cash flow. So this Coca-Cola is a company that in the past I've looked at it, and it is more for I think is for investors that are coming close to their time in which they're focusing more on income and not so much growth. They're looking for more stability. Coca-Cola is a very stable company, so I'm looking more for growth in or let's say with Coca-Cola, I would be looking more of a value play if it ever drops to a certain time, and that's what we want to see when it comes to the price. Um, as you can see, the book value is a little. It went down and then it's a little bit up in the last 5 years. It's grown at 6.2%, but in the last 10 years, actually down at 1.4. Return Average return on equity is 42%, which is really good. Average 5 year return on asset is at 10%, also really good. And the average 5 year return on invested capital is at 13%, which is okay. Dividend investors, you may love this. You probably will like this. Last 5 years, you've been growing at 2.3%. Actually, it's not that good. Last 10 years, been growing at 5.2%. You know, um, I think that there's other companies that grow their dividend a little bit faster. Payout ratio is a little high at almost 79%. When it comes to debt is looking good, even though it's growing. They are able to pay their long-term debt in about 3.5 years with their average free cash flow. And when it comes to share, they were buying really aggressively all the way until 2018, and from there it grew all the way to 2022. So they have actually in the last 10 years only bought back 0.25%, which is really really low. And so what is a fair value for Coca-Cola? That's a great question. Before we jump there, just let you know that I am not a financial advisor. I'm just doing this for fun. I just love to share my love for stocks and my analysis. This is just for educational purposes. And I also just like to get your information. What do you think where I got wrong? I'm also learning, just like you guys are. So, with that said, the first um, valuation that I'm looking at is the historical multiple valuation. The way that I do it is I look back at the last 5 years, multiples, whether it's PE or price to sales or free cash flow to sales or stuff like that, and I try to see what the the market has been paying for Coca-Cola. So if we just take the average of the last 5 years, they have been paying close to $60. It will be a fair value. If we're just looking at the 12 trailing uh, month, the trailing 12 months, that will be at close to 65, and that will be an average of about $62. If we look at revenue based valuation, in which we um, grow the revenue, we look at the profit margin and all this stuff. At 5 years, discounted back at 15%. This is normally, so for those that are new to my channel, I normally like a desired return of at least 15% in all my investments. And part of the reason for that, I know that some of you guys have asked me, the reason is because if I'm gonna be aiming for 10% or something like that, I just prefer to put it on an ETF. So um, if I'm gonna be risking a little bit more of the money, I want a good margin. So looking at the calculations, we'll be looking at a fair value of $51.22. If we look at the discounted earning valuation, growing the EPS for the next 5 years and discounted it back at 15% after applying at 30, the average of 30 PE, we're looking at fair value of somewhere between $42 to $47. If we just focus on the free cash flow, growing it at 5%, we're looking at somewhere between $50 per share in both the average and the trailing 12 months. If we apply a discounted free cash flow valuation for the next 5 years, we are looking at somewhere around $48 as a fair value. Using the owner's earnings valuation, it is a little crazy, so I'm not gonna be using this. I don't know why it gives such a big number. I don't think that this is the best way to value this company, especially with all the payables that I was looking at. So with that, when I put all of the numbers together, I'm looking at a fair value for the Coca-Cola Company somewhere between $50 and $52. So let's just say $51, which will put it a little way lower than what it is trading right now. Now, you may ask, you may be thinking that this is a crazy number, and remember the reason why it is so low is because my desired return is so high at 15%. So some other people, you may do it at 10%. If you would like to get this valuation and change the numbers and make it more at a 10% or 12%, you can go to Buy Me a Coffee there and buy the form, and you can apply your own margin of safety. If I were to want to buy this company, I will have to at least get a margin of safety of 15, and I will probably be looking at buying Coca-Cola at $43 to $44. And so I can hear you already say you are crazy, and yes, I am crazy. So I'm probably not going to be buying this company. Well, I just want to thank you for being watching this video with me, and If you have any comments or any questions, please put them down. Let me know where I got wrong, and I hope to see you in the next video.